Hey, this is Brian from Green Springs Capital bringing you your weekly update. Today, I'm going to expand a little bit more on why we like multifamily real estate investing so much at Green Springs Capital and why this is the only property class that we focus on. So we talked before about the risk mitigation and the demand components of multifamily real estate. Today, I want to talk a little bit about the financing angle. The financing that we receive on our acquisitions is usually from local banks. We also have private investors that work alongside us and they partner with us on our acquisitions. Both of these different constituents, whether it's a private individual or it's a bank, they love lending and investing in multifamily real estate for various reasons. One being it's the safest. They understand the same way that we do that there's a risk mitigation strategy and that there's a constant demand for housing. So because of this, they're able to provide us with the most favorable financing terms, whether that's in lower interest rates, lower down payments, longer amortization, all these different aspects of financing that they will provide for multifamily properties that they will not provide for industrial or retail or office that are much more volatile or varied in their security profiles. Because of this, and because we're buying multifamily properties, we get a outsized return on investment. So the better the financing terms that we're able to secure on a property, the greater return we are going to have on our investment dollars. If we can go out and buy $1 million property and only put 20% down and get 6% interest, and get 25-year amortization. In contrast, if you went out and bought a retail strip mall, you might only get a 20-year amortization, you might have to put 30% down, and you might be paying an interest rate of 7.5%. So the risk profile from that financing that's available on that asset class is much more favorable on multifamily investing than it is in any other asset class that's available on the market. They're taking that one step further. If you're in property classes that are $1 million or more, you also have options to go with Freddie Mac or Fannie Mae, which are government-backed, basically housing lenders that focus exclusively on multifamily investing. Their financing terms are even more favorable, going as much as 30 or 40-year amortization, even lower rates, usually right now in the fives, and they actually offer non-recourse debt, which most local banks will not. These are, financing terms that are not available on most other, asset classes because the government understands that there's a need for housing. They also understand that they're not very good at providing it on their own. So they need to incentivize investors like Green Springs Capital to go out and develop these properties and provide housing for the general public. That's it for this week. If you're interested in learning more, please reach out to us here at Green Springs Capital, and I'll talk to you next week.